Good afternoon, friends. Recently, we have seen that DGGI from GST Department, Director General of GST Intelligence, has issued so-called notices to SDFC Life of 942 crore rupees, and company has deposited around 250 crore rupees under protest. Another so-called notice is being issued to ICICI Prudential of rupees 492 crore rupees, and company has deposited around 190 crore rupees under protest. What is the dispute all about? DGGI has initiated investigation against around 30 insurance companies on the pretext that these insurance companies has availed GST input tax credit on certain input services, which is marketing, sales promotion, business related, provided by insurance intermediaries. And insurance intermediaries means those who are corporate agent under insurance sector. As per this insurance sector, let me tell you that insurance company pay commission to the insurance agent, those who are individual agent, that is subject to RCM liability, reverse charge liability in the hands of insurance companies, but they are corporate agent. They are called insurance intermediaries, and commission is being paid to them also. But there is specified amount, percentage of the insurance policy offered by them in the market, specified amount. To that extent, insurance company is entitled to pay commission to either insurance agent who are individual agent or insurance intermediaries who are corporate agent, specified amount. But GST department has information, and they have come to know that insurance company has paid over and above that stipulated amount of commission, and that is towards invoice raised by such insurance intermediaries towards marketing expense, sales promotion, business auxiliary services. So contention of department is over and above the stipulated specified amount for which commission is being paid by insurance company is not permissible. So GST department is disputing this credit is not available to the insurance companies. Hence, around 30 insurance companies are under investigation, and department has started issuing so-called notices to the insurance companies to deny their credit, that this credit is not available because you have not received the input services. That is the moot question. Why this video then? Why we are discussing this video? It is very interesting for all of us to know that GST input tax credit is one of the most litigated issue when we look at GST as a good and simple tax. Yes, on one side, this contention by the department, GST department, that if any amount which is being paid beyond specified limit by whatever name called, it is not being permitted. So looks like the excess amount which is being paid beyond a specified limit, it is just that such insurance intermediaries has raised the invoice for which insurance companies has not received any services. Though the services which is being stated provided by insurance intermediaries to insurance companies, marketing, sales promotion, business auxiliary related services. But very interesting to watch, GST, the definition of input services and capital goods is such a wide, used or intended to be used in the course or furtherance of business. Now, for soliciting insurance policy, insurance intermediaries can always argue and can defend themselves that for soliciting insurance policy for the insurance companies, there is a specified amount prescribed and that is being paid by insurance companies, so there is no violation. Whatever excess amount which is being paid to insurance intermediaries is towards not soliciting insurance policy for the insurance company. It is towards marketing, business promotion, sales promotion, business auxiliary services. And thereby these insurance companies are contending before the department that whatever excess amount which we have paid to the insurance intermediaries, it is towards input services which is in the course of furtherance of business. And that has got no limitation, no stipulated or specified calculation. That is what the debate and litigation started. But let me tell you one thing, the purpose of this video. We are finding that a lot of litigation point has started in GST on interpretation. Yes, one side there is condition for a specified percentage of commission to be paid to insurance intermediaries for soliciting insurance policy from the customer to the customer when they are selling to the customer. For insurance companies, with the commission amount prescribed, no problem. But question is whether these insurance company can't avail any other services apart from solicitation of the insurance policy, which is marketing, business promotion, sales promotion, business auxiliary. Is there any bar? When definition of input service and capital goods is such a wide definition and department alleging that this amount is being paid to insurance intermediaries and there is no receipt of services in the hands of insurance company, looks like going to be a matter of debate in time to come. But to my mind, this is the compliances. I'm not saying in favor or against, but I'm saying that of course when I look at GST law is clearly saying an object and preamble of GST law is that there will be seamless flow of credit. Input service and capital goods used or intended to be used in the course of furtherance of business. Why credit would be denied? Yes, there are conditions under section 16 subsection 2. And what are those conditions? 6 conditions. As a buyer, as a recipient, you should have tax invoice, which they are having. Receipt of services, goods or services. Goods receipt, tangible, can be evidence, but services being intangible, it is disputed point how to prove that services are being received by the buyer or recipient, and that is what the debate in this particular sector. Third, supplier must have paid taxes. Those insurance intermediaries must have paid the taxes, which is the case they have paid taxes. Only allegation that non-receipt of services. 4. As a recipient, you are regularly filing GST return. 5th, credit is availed by recipient and buyer must be auto-populated in GSTR 2B effective from 1st January 2022. And 6. The credit which is auto-populated in 2B should not be restricted as prescribed under section 38, and this provision applicable from 1st October 2022. And there are 6 restrictions in section 38. that if your supplier has taken new registration for specified period, credit may be denied to the buyer. If supplier default in payment of tax for specified time period, may be another restriction for you, recipient. Even though it is auto-populated in 2B, but your credit can be denied. Third, if there is difference in outward tax liability as shown in GSTR 1 versus GSTR 3B by your supplier, and that exceeds the specified limit. Fourth, your supplier has availed credit in 3B is not matching with 2B and exceeds the specified limit. Your supplier credit is going to be denied for recipient buyer. Fifth, your supplier default in compliances of section 49 subsection 12, which is rule 86B, that you can use your e-credit ledger to the extent of 99%. Compulsorily, you have to pay 1% in cash. And last, for specified class of person, again, government may notify the restriction. These restrictions are notified from 1st October 2022, but rules are yet to be framed. But this is what the condition all about for availing credit. So for me, these so-called notices to insurance companies under insurance sector, and specifically for services provided by insurance intermediaries towards marketing, sales promotion, business promotion, on allegation that no input services provided, and input service being intangible, very difficult to prove the receipt of same to satisfy the condition under section 16 subsection 2, is not matter of debate only for insurance sector, is a matter of debate for all other sector. But that is what the dispute all about for this insurance sector, and the so-called notices are being issued to leading insurance companies like SDFC Life, ICICI Prudential, and contention of these companies are also out, that they are also looking into the interpretation aspect, and they have paid whatever they are paid under protest, and they will litigate the matter. But GST is opening up Pandora's box when I look at, and two aspects I can tell you in GST going to be most litigative in time to come. One is term supply, like the term manufacture as defined under Central Excise Act 1944. Even after 70 years, we find many litigation only on this term, whether manufacturing is being done or not. And second most litigative point would be in GST input tax credit. Though it is said object and preamble of 101 Constitution Amendment Act is seamless flow of credit, but with the condition under section 16 subsection 2 read with 6 restriction under section 38, seamless flow of credit is a matter of debate for all of us together. Yes, in the context of fake invoicing, in the context of fake registration taken by certain unscrupulous person, raise the fake invoice without supply of goods or services, is a matter of concern for government exchequer, and that is how these conditions and restrictions are being placed. But simultaneously, we have to create check and balances. We have to provide ease of business. We have to ensure the theme, object and preamble of 101 Constitution Amendment Act, seamless flow of credit. We have to find ways and means, and we know that we could not implement GSTR 2 and 3 automated ITC matching and mismatching provision, which is omitted only from 1st October 2022. So for the past period, we are having reasonable region for the buyer and recipient, that there was no automated matching system available because of non-implementation of GSTR 2 and 3. So we have to find ways and means. Yes, we have to protect government revenue, but not at the cost of ease of business. Thanks for watching. Stay tuned. Thank you very much.